Is the dream of the African middle-class consumer hitting a wall, or are we just following the wrong map? Gabon has just flipped the kill switch on social media, citing security threats, while one of Nigeria's most beloved consumer brands, Eden Life, is officially pausing its B2C operations to chase corporate clients. Meanwhile, defense tech startup Terra is now valued at over $100 million as it extends its funding to $34 million. The stakes for us, the builders and investors, they are shifting. We are witnessing a brutal divergence. While lifestyle tech struggles to stay afloat, heavy-duty infrastructure is where the big money is betting. Is the consumer market too fragmented to scale, or are we simply losing our appetite for the long game? Hello, everyone, and welcome to Tech Tides Africa podcast. This is Karen coming to you from a very cold, very gloomy Kenya. And joining me is Kelvin. Hello, Kelvin. How are you today?
I'm doing well. The rains are beginning to fall here in Nigeria. It's still hot, even with the rains. And we had some usual national grid issues. So there was a lot of blackouts last week in some regions of Nigeria. But I'm optimistic. I'm feeling good this Monday. So, yeah.
Oh man, every time there's rain, you think about lack of electricity, and I can't imagine how bad it gets in Nigeria. So our prayers are with you guys as you begin this new season. Starting us off today is a trend that I think we started seeing last year. I don't know whether to call it a dangerous trend in the African space where governments suspend social media. So the Gabon government has suspended social media over security concerns. The media regulator, the High Authority of Communication, ordered the immediate suspension of social media platforms until further notice. They have cited defamatory, hateful, misleading content that is capable of undermining national security and institutional stability. So they have blocked out a couple of services like Meta services, YouTube, and TikTok, which is a trend that seems to be growing in Africa. I don't know what you think about that, Kelvin.
I mean, it seems to be the response now from African government. They all seem to be copying each other's homework. And,
you don't like it, block it.
You don't like it, block it. So usually it's around elections that we have noticed this, at least from last year. Most of the bans happened around election periods. But in the case of Gabon, they have cited false information, the spread of false information, defamatory content, and things like that. I don't buy it. There has to be something else going on. We're just not yet sure what is behind it. But for me, it's like there are positives to social media and there are negatives to social media. Some of the negatives are some of the things they have cited, right? Those are actually true. But is it enough to stop the good that social media does? I don't think so, especially in the digital age that we are in. There's a lot of business that is conducted online. There's a lot of trade that is conducted online, and all of these things are good for your economy. They bring in revenue, they bring in eyeballs and things like that. So there has to be some other ways they go about blocking, for example, spread of false information. I mean, one of the cool things that Twitter or X these days introduced is community notes as a way to check the spread of false information. I think the way they implemented it as well is such a clean implementation. So there are ways to tackle these problems without just blocking these streams of communication. And that's what I think about this.
Yeah, I completely agree with you. And as I was looking at this, I realized that as a founder, there's something we say in the communication or content marketing world, and that is, as much as possible, make sure you invest in owned channels, because it seems to be becoming a real operational risk in emerging markets to depend fully on social media platforms. It's starting to become a real risk because we're seeing a lot of businesses, companies, corporates, startups that are using social media primarily for their marketing. Like that's their primary source of marketing. So if you're fully dependent on platforms, on social media platforms, then such things become operational risks for you. So I think it would be a good idea for founders to begin to think about and invest in owned channels, apps, email lists, things like those. Because when there is disruption, let's say WhatsApp has been blocked, TikTok has been blocked in your country, are you able to continue running your business? And I think that's a real question to start asking now, because it seems to be, as you have said, governments are copying each other's homework. So it's a good thing to think about moving forward.
Yeah, just imagine some of these chatbots that are built on WhatsApp that we have been seeing recently, AI chatbots. I believe Aproco Doctor launched one last year that's supposed to be like a medical consultant. And just imagine he's in Gabon now and then WhatsApp is blocked. So yeah, it's definitely something that founders, business owners, and anyone trying to build a solution in Africa has to think about moving forward. Over to Nigeria, there's an investigation into Temu from the Nigeria's Data Protection Commission, and it has to do with privacy concerns. How are they using user data? It seems to be violating some of the 2023 Data Protection Acts. And this is something that we have been seeing going on, and it keeps building since last year and I think 2024, but we especially saw it a lot last year where African governments are beginning to crack down on these global platforms on how they use our data. So what did you see in this story? Because I know we have been talking a lot about Temu and Jumia and some of these e-commerce platforms. And it looks like Temu is doing something fishy at the moment, but only the investigation will reveal these things.
Yeah, I always get excited when I see such things, because I do think that, and I've consistently said this, there are double standards that are happening across the world when it comes to issues of technology. And data privacy is a trend that we have been seeing, as you have said. Data sovereignty is something that we are seeking to gain as a continent. Many countries are doing that. And with that comes data privacy as well. When I read this, there are quite a few allegations that are interesting, like opaque data handling, online surveillance, cross-border data transfers, possible violations of data minimization rules, especially when it comes to data minimization. We're seeing a lot of hacking happening at the moment. So how much data do you actually need to save or to acquire from a client? That is a question that needs to be asked, especially when you are dealing with B2C clients. We spoke about this last week, where we said it's very easy to take advantage of end consumers because not many of them understand things like data minimization, understand things like how is my data being handled once I have given it away. What are some of the breaches that can happen that can cause harm for me? Last week, I don't know if you saw, PayPal said that they had gone through a data breach and some of their clients' information was at risk. And one of the things that they talked about was possibility of identity theft. How many people in Africa using things like Temu understand that that is a risk that they run as they're giving out their information? Not many. So I do appreciate the fact that the government is coming in to ensure that its people are protected in the way that their data is used. In Nigeria alone, they are handling 12.7 million people. That is a lot of data. And so I'm very appreciative of the fact that the government is coming in to protect its people in how the data is being handled. There has to be transparency in data handling, and they have to only collect what they need. Now, when it comes to online surveillance, I don't even understand how that is happening. So major red flags for me.
Yeah. One of these stories we talked about a couple of episodes ago was on PayPal launching in Nigeria, and that's still going on in the background. I'm sure there's a story down the line that will bring PayPal back to the podcast. But there are some issues already coming up online with this collaboration. So just thought to make a note on that, and then maybe we'll come back to it on another episode.
Yes. Still in Nigeria, Eden Life, which is such a beloved lifestyle, I believe you will have to confirm it for me because this is an assumption.
Yeah, it is. At least for the people based in Lagos.
All right. So it's a lifestyle and concierge startup that has paused its consumer-facing operations to pivot towards enterprise and corporate clients. I would like to hear your thoughts on this because it's happening in Nigeria. I do know that in Kenya, we're seeing a trend where companies that have been focused on both B2C and B2B are pausing B2C to focus on B2B. And it seems to be starting in Nigeria as well. So I'd like to hear your thoughts on it.
We published an article last week on this particular trend on Startup Graveyard Africa. It's a trend I started noticing last year, towards late last year, where you're seeing major pivots into B2B, and it has just continued this year. And we're seeing it now, at least the first one we're talking about on the podcast is Eating Life. From their own perspective, you can kind of understand it. With businesses, when you're dealing with businesses, you have more stable income. When you're dealing with consumers, they can, be subscribed to your service today, and then tomorrow inflation is hitting hard, price of fuel is going up, the middle class, as they've said in the last 2 years, keeps on shrinking. So how many people can afford a lifestyle service? In the case of Eating Life, it does make sense, the pivot to B2B. And I think a lot of founders in Africa generally are realizing that the economics of B2C is not really working for their models. So we are beginning to see that shift. And I don't think it will stop at Eating Life. I think we'll see a lot more this year as well.
Yeah, I do think B2C is in the same way we talk about logistics being a giant. I think B2C is the same because you need high numbers. The purchase price point is lower than it would be for a B2B client. I'm not saying that it's always low. I do think there are commodities where you can charge very high for B2C, but majority of them will be on the lower spectrum, especially if compared to a B2B clientele or business model. And then the logistics of it, you're reaching more people. Therefore, the logistics are a lot more scattered and crazy. I think about customer acquisition costs. When it comes to B2C, they must be quite high compared to B2B, where it's a lot more in person, maybe a few events. B2C is, I think, a lot more expensive when it comes to customer acquisition costs. And then, as you said, weak retention. You have a client today, tomorrow, maybe they've lost their job, they can no longer work with you, or even as we're seeing pressure in the economy, the first thing that people will drop is things like lifestyle products. So I do think that this was a smart move from their end to move towards corporates, because corporate contracts are predictable, budgets are set in time. You know that if you've signed a contract, it will probably be honored until the end. So there's a lot of revenue stability that comes with that. Innovation can be better because your price points are high and good. So I definitely think that there's a bigger reward towards the B2B side, and we'll probably see more attention from startups and even from tech companies moving towards the B2B business model.
Yeah, and in addition to all of that, at the end of the day, you're trying to be profitable as a startup. That should be your focus. So this shift also gets them on the line to profitability. So yeah, we have moved from growth at all costs that we saw in 2020 to 2022 or 2023 even, to now where we are seeing sustainability or resilience at all costs. So startups are beginning to think about profitability even more. And I think that's a good thing, because then we can see more sustainable business models. Then you have to really think about profitability from day one, and I believe the ecosystem will be better for it. Staying in Nigeria still, RiseVest has secured a fund and portfolio manager license from the SEC in Nigeria. And this allows them to capture growing demand for Nigerian investors that want to tap into the US stock market. They had an issue last year with the SEC where they didn't have the proper license that they needed to work. And RiseVest responded. I use RiseVest myself, so I got an email from them that they sent to customers addressing the issue and said they were working with the SEC to resolve this. So it's good to see that almost a year later, we know these things take time. They have finally resolved this issue and are now legally regulated. So that brings more confidence into the brand of RiseVest and also their portfolio companies like Hisa in Kenya and also Chaka. So yeah, what do you think about this development?
I think it's a trend that we've talked about, Kelvin, on the podcast for a while, where we're seeing a lot more fintechs are trying to get within capital market regulated frameworks to build confidence with their customers and also to cement themselves as financial service providers that are taken seriously. Because for a long time, I don't think we took fintechs as seriously as we should have. Other than the ones that worked on the B2B space, the B2C fintechs have mostly been borrow money and then get a million phone calls making you pay back and things like those. But we're seeing them begin to be taken very seriously within the financial space and compete toe to toe with banking. Last week, we talked about M-Pesa and them bringing in the ability to invest to anyone who has an M-Pesa wallet. And now we're seeing someone else, RiseVest, allowing people to invest in the US stock exchange. I think that we're seeing a move in fintechs becoming very solid players in the financial market and competing toe to toe, which is a trend that we started seeing a while back and probably hoping for, and now we're seeing it become a reality. So I think it's a really cool move. I think it's not the only one that we will see. We have seen a few. We will continue to see them as they evolve towards licensed financial infrastructures, institutional credibility, and regulated capital participation for the common Mwananchi. I think that's the most important part to say, is that a lot of fintechs target the everyday man. In Kenya, we call her Wanjiko, the everyday person who probably would not have access to these financial instruments. So it's a really good thing to see that they are coming under regulation and therefore getting a lot of credibility and customer trust, which will go a long way in building the fintech industry.
Yeah, we do have brands like CarroWise and PiggyVest that you would say they operate in the wealth management space. So they help you save and invest your money into safe instruments like treasury bills and government bonds. And they have done a lot of work in terms of like educating and building like a savings culture here in Nigeria. I think those two brands have invested a lot in the education aspects of it. They both have significant traction here in Nigeria. I don't think they are presently operating outside Nigeria, but they are very popular here in Nigeria, and they are both SEC regulated as well and have been for the longest time. Yeah, fintechs are beginning to do more than just buy airtime and transfer money. There are also some of these use cases that we're seeing with wealth management, with investing in stock markets and things like that. Of course, we know fintech is the biggest player when it comes to startups in Africa. So I feel like they are more mature than some of the other industries in terms of startups because they've had longer and a lot more investment into that space. So you can see the maturity in some of the brands that have stayed for longer periods. So it's really cool. It's really cool to see that we saw this issue last year and then we are now seeing it resolved. So case closed.
Yeah, absolutely. And I do think that Nigeria is leading the charge when it comes to fintechs. And now on to something that I kept complaining about last year, which is Nigeria doing too much. We are still in Nigeria for the last topic that we will be handling today. I'm not very happy about this, although I am happy for you guys. But
I mean, last week we basically talked about Kenya for most of it.
Yeah, but when you guys you show up with a bang. I mean, what is this? Please. Terra Industries is now being valued above $100 million after funding extension. The industry that is in Nigeria, it's a defense technology startup that develops drones and sentry towers, unmanned ground vehicles, maritime surveillance systems. They have a proprietary software that they use for this, and they've been going through some funding rounds. If I'm not wrong, I believe they started with $11 million and then $22 million, which was raised in less than 2 weeks, which just shows a lot of investor confidence. And now they've extended that to $34 million to fund their expansion. And one of the things that we're seeing they want to do is expand their manufacturing capacity. This is interesting because it's not within the space that we normally talk about when it comes to startups in Africa. And we're seeing a company outside of the main domain, which is usually fintech, e-commerce, a little bit of health tech. Now we're seeing someone in the defense technology with a lot of investor confidence.
Yeah, it's always good to see players in areas that are not fintech generally, because I think there are a lot of other opportunities, but problems that need solving. And defense tech is one of them. There's a lot of conflict in different parts of Africa at the moment. We know about the conflicts that are going on in Nigeria. So having a startup operate in that space now is cool. Hopefully they go towards solving like some of the problems. I know when it comes to defense tech, there's usually a lot of, I would say, some negative connotations from it, because it's almost like you're profiting from conflict. But then again, there are real problems that need solving. There is a lot of insecurity, there is a lot of crime, and you would hope that the startup in this space starts to actually make some strides in tackling some of these problems. But in terms of the funding, you can see that there's a lot of interest from investors, because it was just a couple of weeks ago that they raised 11 million. And now they are raising an additional 22 million, not even a month later. So there's a lot of interest. And if you look at the US, if you know about the US history a bit, you know about the defense tech in the US, you understand why there's interest in this particular startup. But like I said, I'm more on the conservative side, because I'm thinking of, are they actually going to tackle some of the real problems, or are we going to see some of what is going on in the US when it comes to defense tech?
You make some very interesting points, because I do think that conflict has always been a part of human nature from the beginning of time. And I don't know that we will ever end it. I don't think that's something for me to say. I'll leave that to philosophers. But I do think that we have real problems that require actual solutions. I've seen that they have actually gone into partnership with a company in Dubai. But I do hope that even as they develop, they will think about the conflicts and issues that we have in the continent, even as they develop for people outside of the continent, which would be amazing, because we do want to see homegrown startups go beyond the borders. But I do hope that they will focus on actually solving real problems. And that's something that we've always believed in this podcast. But really good show of confidence and differentiation that Africa can come up with other solutions, not just fintech. So yeah, I'm loving this story.
Thank you for listening to another episode of the Tech Tides Africa podcast. Remember, leave a comment or share with your friends. We'll see you next Thursday at the same time and place you get your podcast. Until then, stay well.